So you clicked on this video to review VYM, the high dividend ETF from Vanguard. It's a great ETF to have in your portfolio as you're generating passive income from dividends. We've done other videos on dividend ETF, such as SCHD, so make sure you check that one out. And without any further ado, let's jump in my computer and check out VYM. Let's look at the VYM, Vanguard High Dividend Yield ETF. So this is a great ETF if you're looking to collect dividends. If you were to buy a typical S&P 500 index fund that tracks the S&P 500, which is the 500 biggest companies in the U.S., you'd have a combination of both companies that paid dividends and companies that paid no dividends, right? So you'd have dividend companies and growth companies. You'd have dividends that are very low, dividends that are medium, and dividends that are high. It'll be a combination. And after that's all said and done, the average dividend yield that you receive would be in the mid one, so maybe 1.3, 1.4%. Not a great dividend yield for someone who's looking for dividend. So this is why Vanguard High Dividend Yield ETF comes in handy. So it is an index style, which means that it follows an index. As we go through it, you'll see more. It's domestic stock, so there's no international stocks here. Large value, which means that these are fairly large companies. The expense ratio is 0.06. So that means for every $10,000 invested, you'd move the decimal places 4 places over. So it'd be 1, 2, it'd be 6 cents, 60, it'd be $6. So you'd pay $6 per year for every $10,000 you have invested. It's trading right now for about $100 per share. And the yield over the last month has been about 3.3%. Okay, so let's look at an overview. The ticker, VYM, the management style index, which means it's passive, is only U.S. companies. They're pretty large value. It's been in existence since November 10th, 2006. The year-to-date returns so far in 2023, it's been down about 5%. The product summary, it seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by a high dividend yield. So it tracks that. So companies that do not have dividends would not be in this index, like Tesla or Amazon. It provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yield, which is great if that's something that we're looking for and follow a passively managed approach. Let's look at the performance and fees. So with it, it's been in existence since 2006. So we can look 2000. Let's start here. 2023 is this year, and they extracted it by quarter. So the first quarter of the year, it's been down about 1.8%. Second quarter, down about 1. Second quarter, it's up about 1.4%. Third quarter is down about 1 point, almost 2%. So the first quarter and third quarter down about 2%, almost like 4%, and then it's up about 1.4% in the second quarter. And we're still in the process of the fourth quarter right now. Last year, we see that it ended almost flat, about down about 0.5%. In 2021, it did great. It was up about 26%. let's look at more performance. So the 1 year return has been about 12%. Over the last 3 years, the return has been about 11.8%. Over the last 5 years, the return has been about 6.8%. And over the last 10 years, it's been about 9.4%. And since the inception in November 10th, 2006, it's been, the return has been about 7.67%. So not bad. Compared to the S&P 500, I'd probably say it's probably underperforming the S&P 500, which is to be expected because the S&P 500 has some of the largest companies in the S&P 500 don't pay dividends, like the growth companies. Okay. Let's look at the composition. So VYM had about 453 stocks, which is a large amount of stocks, right? So you're diversified with just buying one share of VYM. You have a little piece of 453 companies. So that's what you call diversification. The median market cap for the companies is $123 billion, which means half of the companies in the VYM ETF are larger than 123 billion, and half of them are smaller. The earnings growth rate for the VYM is 12.6%. The PE ratio of VYM is 14.8, which means it's fairly valued. Okay, we said 10 and below, a PE ratio of 10 and below is deep discount. Anything 17, 18, 19 above that is richly valued. So that's a fair value. You're getting, you get your money's worth. Okay, so you paid about $14.80, or almost $15 for every $1 of earnings. Not bad. So there's about 59, almost $60 billion in the fund. Now let's look at the sectors, the weighted sectors. So you see how it tracks the benchmark. It's really replicating it, right? So the benchmark has 2.3% basic materials, and the ETF has 2.3% basic materials. Consumer discretionary at about 9%. Consumer staples about 12.8%. Energy is about 11.8%. Financial is the largest sector, almost 20%, 19.8 to be exact. Healthcare, 12.5%. Industrials, 12.1%. Technology, 7.5%. Telecommunication, 5%. And utility, 7.1%. So again, you see you're diversified among sectors, which we talked about in previous videos, right? So that's what you want, right? Because you want your dividends to be consistent. You don't want there to be a problem if there is a problem or something wrong with one or two companies in a sector. If there's a problem in one or two sectors, it will be offset by the other sectors. For example, if there's issues going on in the consumer staples, you have these other sectors to offset it. And that's the benefit of diversification. These are the top 10 holdings. Again, you're going to see some familiar names. ExxonMobil, which is from the energy sector, represents about 3.6% of the fund. Over 18 million shares, representing about $2.1 billion. That's a large fund. So that's energy. Number two, J.P. Morgan Chase, 3.2%. Johnson and Johnson, that's healthcare, 2.8%. Procter and Gamble, that's consumer staples. So you see, no one company is over 4%, which is great. Broadcom, that's a semiconductor company. Home Depot, 2.35%, right? 4.6 million shares. Okay? Chevron, AbbVie, Merck, Pepsi. That's what you call diversification, right? So the top 10, they're not telling me now how much the top 10, what percentage there are of the entire fund. I don't see that there. Let's look at the let's look at page 2. So here you have page 2, the next 10. You have Walmart representing 1.75% of the fund. All right. You have Cisco, you have Coca-Cola, you have McDonald's. We did videos before where we talk about if all your money was in McDonald's and McDonald's took a hit, all your passive income would be gone. However, if you buy VYM, McDonald's represents less than 1.5% of the total ETF. So if McDonald's got a hit and they cut their dividend and you own VYM, it would only affect 1.47% of your dividend because you have all these other companies to take up the slack, like Bank of America, Pfizer, Comcast, Wells Fargo, Intel, ConocoPhillips, and that's what you call diversification. Okay, you want multiple companies. Okay, it's basically a basket with over 450 companies. Texas Instrument, 1.1%. Philip Morris, 1.1%. Amgen, Caterpillar, Verizon, Union Pacific, the railroad company, Qualcomm, Honeywell, Bristol Myers Squibb, IBM. That's what you call diversification. No one company so far seems to be holding anything up to 4%. All right, the highest one was like 3.7%. NextEra Energy, UPS, AT&T, Raytheon Technologies, Goldman Sachs, Medtronic, Starbucks, Automatic Data Processing, Morgan Stanley. Again, a tremendous amount of diversification. I'm not going to continue to go through all of them because obviously it will take some time and it's up to 40 pages. I'll do one more. I'll do page 5. But you see here, it is over 400 companies. Mondelez International, Gilead, Lockheed Martin, CVS, Chubb, Eaton Corporation, Schlumberger. Some of these you may not even heard of. Progressive, got the insurance company, Citigroup, BlackRock. Lots of companies, lots of diversification in that one ETF. And that's the great thing about it. The distribution is quarterly. It pays quarterly and it pays on the 369 schedule. So here you'd see here they paid on like the third week of the month. So they pay on the 369 schedule. So March 23rd they paid, and they paid 71 cents per share. And you'll see the little fluctuation because there's different companies, there's over 400 companies. So it was 71 cents per share. Then in June, it was 87 cents per share. And then in September, it was about 78 cents per share. The next one, I guess, is going to be third week of December of 2023. So you see, it fluctuates. Okay? It fluctuates. See the fund manager. Let's look at price. I think we looked at it before. We said it's about $100 a share. Yeah, with this trading right now for about $100 per share. Let's look over the last 10 years. So we seen about 10 years ago, they're trading at about $61. And so 10 years later, it's trading about $103. Okay, so there has been some price appreciation. Okay, so now let's go to the Seeking Alpha. Look at the dividend growth because that's important. So we went over the holdings. We said it's very diversified. Let's look here. The 52-week range, the low has been $98.40. So right now it's trading about $100. So we're close to the lows. The high has been about $113. So we're close to the low. The expense ratio, we did that is 0.06%. So about $6 for every $10,000 you have invested. The dividend frequency is quarterly. I would say it pays on the 3, 6, 9, 12 schedule. The dividend rate, it pays about $3.35 per year. That's a trailing 12 months. And we see that it fluctuates in terms of the amount. We saw anything from like 78 cents per share, 72 cents per share, in the 80s per share, and it really fluctuates. Let's look we kind of looked at the holdings already. Yeah, we look at the holdings already. The top 10. Let's look at the dividends. Let's look at the dividends. So the dividend yield for VYM is paid about 3.36%, about 3.36% dividend yield per year. So for every $100 you have invested, for right now it's about $100 a share, you'd get about $3.36 per year, and it's paid quarterly. The dividend growth rate for the trailing 12 months has been about 4.6. The dividend growth rate has been about 4.26% for the trailing 12 months. The dividend growth rate, the compound annual dividend growth rate over the last 3 years has been about 5.25%. So over the last 3 years, it's grown its dividend by about average of about 5.25%. It's not bad. That normally keeps up with inflation. We've been at a very high inflation rate now, but normally that'll be above inflation. So that's good to see. The 5-year dividend growth rate CAGR is about 5.6%. Again, that would keep up with inflation, which is great in your buying power. And the dividend growth rate over the last 10 years is about almost 7%. So the dividend growth rate is great. It's keeping up with inflation. The dividend yield was at about 3.36%. And they call this the Vanguard High Dividend Yield ETF. High dividend yield at 3.3%. I don't know if I'd call it high, but the dividend growth rate is pretty good in the 5s and 6 range. That's good. That'll keep up with inflation. But the dividend growth rate of 3.3%, I wouldn't really call it high. When I'm thinking of high dividend growth, when I'm thinking of high dividend yield, I'm thinking of 5%, 6%, 7%. That's what I'm thinking in my mind. But the diversification is great. The expense ratio is low. And the dividend growth rate is good. But the dividend yield itself is not super high. So I will say that it has been paying dividend payment consecutively for 16 years. We said it's been in existence since 2006. So this would be like its 17th year of existence. Consecutive years of dividend growth. Been about 12 years it's been raising dividends. So those are all great signs. Let's look at the dividend history. So in 2000, let's go back to the max. Yeah, that was great. So it started in 2006. Yes, 2006 is when it started, and it was paying 18 cents, 27 cents, okay, 35 cents. So that's 2000, and then it went to 37 cents. It went to like 20 in 2010. It's like 23 cents, 33 cents, 42 cents, 53 cents. So you see, for the most part, it seems to be trending up 60 cents. But again, there is some fluctuations though. But over the time period, you've seen that now we're up to 88 cents. But there have been growth. There has been growth of the dividends. There have been growth of the dividends. No question. Which is good to see. So I would say the Vanguard High Dividend Yield ETF is a good ETF to have for diversification. Definitely as a beginner, as you're getting your foot wet into getting a portfolio, to be diversified with over 400 companies, to have that dividend yield in the mid to low threes with that great dividend growth rate in the 5 to 6 range, compounded over time, that low expense ratio. It could be something you kind of set it and forget it and put money into it. It could also be something that you invest in as a core holding, maybe half of your portfolio, and then have single stock, maybe of higher yield, 4 or 5, 6%, to kind of balance out the portfolio. Again, guys, this is the MD Investor coming with information to increase our financial IQ so we can teach our children and break the cycle of generational poverty. Don't forget to subscribe on YouTube, and I will see you on the next one. MD Investor out.